Hi, Deshupriyo. What is the most important reason why people fail in tough examinations like the SEBI Grade A, the NABARD Grade A or B, or even the RBI Grade B? It's not that they are not studying, it's because they are studying in the wrong way. That is what I'm trying to fix. And in this video, you will see how I will be covering each topic in a comprehensive manner, how I will be explaining each and every concept. That is how you need to study. You need to understand what is more important, what is less important, and each of these things I will be mentioning as I cover the current affairs of SEBI in this video for the month of February 2020. My objective is not just to cover the current affairs. My objective is to make you a person who is fit to sit as an officer in the Securities and Exchange Board of India. A person who is able to handle his job and his responsibilities, and not somebody who has just passed this exam by mugging up some stuff. So that is my main objective. And you can also join the free guidance group that I have on Telegram, where I give advice regarding all of these things, and also we share PDFs, and also we have a community that is intent on cracking these examinations. So without any further delay, let's start the video. As you watch this video, I want you to prepare your notes as well. So whatever I am showing you, whatever I am telling you, just write it down. Even the subtle things you have to grasp. So I am going to of course cover the current affairs for the month of February 2020, and all these things are going to be SEBI related. So everything is focused on SEBI. Now while you are listening to me, try and understand the way that I am thinking. So this is how the people who are selected in the exams are actually thinking. So all the people who have been successful in SEBI, in all of the difficult examinations, I have talked to them, and that is how I have found out this approach, and it also helped me a lot when I was preparing for RBI. So always try and condense the information, because a lot of it is out there and you do not need to know everything. So with that in mind, let's begin. So number one, SEBI allows the use of regulatory sandbox by market players. So what is a regulatory sandbox? It's a very important new thing that SEBI has actually announced, and even RBI was talking about regulatory sandboxes. So what it does is that this is only applicable for select customers. So only a few customers, they are going to be involved in this regulatory sandbox. Now a sandbox is something that IT people will be knowing. So various kinds of tests you can do in a sandbox. So for software, we used to have this sandbox, but for the regulation space, it's something of a new development. So what does it do? It actually allows the live testing of new financial products or services in a controlled or test environment where regulators can permit regulatory relaxations. So many of the things which are in the real world will not be applicable in the sandbox. So in the sandbox, all those innovative things can be done. So you can think of it, if you are an IT engineer, you can think about your QA environments. You can think about your environments which are the non-production environments. So what do we do in those kinds of environments? We test out our variables, our attributes, right? So that is something that the regulatory sandbox will allow you to do. And SEBI has now permitted the use of the regulatory sandbox. So the testing, it will be done in isolation from the live market while SEBI forms policies or regulations. So in this sandbox, there are going to be lots of different developments. There are going to be a lot of different new innovations which are going to happen, and SEBI on the fly will be thinking about how they are going to regulate these activities. What is the best policy for regulation? So it will be very dynamic, and it's a very exciting space for people to work in. And of course, if you are selected in SEBI, you will definitely get to work in some dynamic space like this. So new products, processes, services and business models can all be tested on limited customers, and it will be a very innovative kind of a space. So remember, regulatory sandboxes have now been allowed. Let's move to item number 2 now. NSE, National Stock Exchange, launches RFQ platform for debt securities on 4th February. BSE launches it on 3rd February. So these dates are not that important, so you can ignore the dates. Just understand what is this RFQ. This RFQ, it is a request for quote. So it is a new electronic platform for debt securities which is aimed at improving liquidity in the segment. So as we all know that in the debt markets, there is a problem with the liquidity. We do not have adequate liquidity in the debt markets, and for this the NSE RFQ RFQ will be a very great new addition. So what it will allow to do, it will allow the negotiation of deals in eligible securities. So in various eligible securities, you can have some deals, you can negotiate some deals in this request for quote RFQ platform. So what are the eligible ones? They are corporate bonds, securitized debt instruments, so whatever has securities attached to it, then municipal debt securities. These are very important, like the urban local bodies sometimes bring out some bonds, and the municipal bonds we call them. So municipal debt securities will be allowed. Then of course we will have that government securities has to be there. We have the state development loans, SDLs, we have the treasury bills, the CPs meaning the commercial papers, the CDs which are the certificate of deposits, or any other security as specified by exchange from time to time. So various eligible securities, you are permitted to deal in them. And NSE RFQ was launched by SEBI chairman Ajay Tyagi. The RFQ platform will be hosted on the existing CBRICS environment. So what is this CBRICS environment? It is the NSE corporate bond reporting and integrated learning and settlement environment. So just remember the name of the environment and the eligible securities. So let's move to item number 3 now. Nasdaq recognizes NSE on New York Times Square billboard. Now what is the Nasdaq? So it's a very important, we call it the Nasdaq Composite Index. So it's a very important stock market index of USA. So there are three major stock market indices which are very important in the global scenario. So one is Nasdaq, the second one it is DJIA, which is the Dow Jones Industrial Average, and also third one is the S&P 500, Standard & Poor's 500. So these three are the very important you can say stock market indices which are recognized all over the world and very important in the US space. And Nasdaq, now they have their billboards running in the famous New York Times Square, and there they have actually recognized NSE. So what was the recognition given for? So NSE was recognized for becoming the world's largest derivatives trading exchange by volume. Remember, this is not by value, it is by volume. So NSE has become the world's largest derivative trading exchange by volume in 2019. So this means that NSE traded the most contracts in the world last year, surpassing the US's CME group to top the future and options table by volume for the calendar year 2019. So this is very important. Remember this news and remember that it is by volume. So in value terms, NSE is still far behind the US counterparts like CME and ICE as shown by data from the World Federation of Exchanges. So for example, the average contract size, so this is for a specific type of contract. The size in NSE was found to be $9,500 average size, but the average size in CME it was $175,000. So of course the value it will be much larger since they are dealing with dollars and we are not only dealing with dollars. So the value is quite less, but by volume we have surpassed them. So it's a very important just new achievement by the NSE. Let's move to number 4. SEBI makes accommodation for delays in open offers due to disputes. So very important. What is an open offer? First of all, so open offer you can think of something like a rights issue. So it is a secondary market offering like a rights issue. So when does this open offer actually happen? This happens as part of a takeover code defined by SEBI. So whenever the company acquires a 15% stake in another listed entity, remember that an open offer is triggered. So when 15% stake they get in another listed entity, an open offer is triggered, and the acquiring company must offer to buy 20% additional stake from existing shareholders, and it is typically open for a month. That's why it's called the open offer, and to allow post acquisition exits. Now this is very important why they are going and giving an open offer. It's because whenever the takeover is happening, so in that takeover process there will be some minority shareholders, there will be some shareholders which are not party to these discussions, and they might feel that the management change is happening, that we do not want to remain associated with this company anymore. So they might go ahead and want to sell their shares, and this open offer offer, this actually allows them an opportunity to sell those existing shares at a discount. So they get a discount also, and they can give those shares to the new entity that is coming and taking over the company. So it will be very easy for the existing shareholders to exit, and this is the reason for the open offer. Now SEBI suggested that 10% interest should be added to the open offer price if the offer is delayed due to disputes like valuation, related party transactions, complaints, payment delays, etc. So if there are any delays, then you need to add a 10% interest to the open offer price. So the acquiring company, they must have some kind of a penalty that they are delaying it. Now why was this actually newly just suggested by SEBI suddenly? This is because the Malaysian firm IIH, it was actually trying to take over Fortis, and this in the Fortis acquisition case, there was a counter claim filed by a company called Daiichi Sankyo. So they had filed a case in the Supreme Court, and the Supreme Court put out a stay order, and that is why it was causing a lot of problems to the shareholders, because the open offer is being delayed and they cannot exit, and that is why SEBI has made this accommodation. So it's very important. Let's move over to number 5 now. SEBI asks exchanges to annually review commodity derivatives performance. So what are commodity derivatives? I hope that you know all about derivatives and commodity derivatives. So derivatives is anything that any kind of financial product, you can say, that derives its value out of an underlying. So out of something they are going to derive that value, and commodity derivatives, they are basically the non-financial underlyings. So anything over which the derivative is based, if it is a non-financial thing, usually a non-financial commodity, then we call it a commodity derivative. So commodity derivatives can have underlying as metals, they can have agro products, they can have grains, coffee, etc., etc. So all those physical commodities, the derivatives based on that are called the commodity derivatives. So they are now being asked, exchanges are now being asked to annually review those derivatives performance. So all stock exchanges must review the performance of all contracts in the commodity derivative segment on annual basis for each financial year and disclose it by June 30 of the following financial year. So this is the time frame that they have gotten. Now the parameters for the review, what are the parameters? It's very important that you know the parameters. So the brief about the commodity, its sample picture, its life cycle, and various varieties and grade of the commodity, because there might be some good grade, some bad grade kind of the commodities found in India, and the commodity fundamentals among others are the parameters that are under review. And the performance review shall be consulted with the Product Advisory Committee, the PAC. So PAC is also something that the SEBI has recently introduced. So back in 2019, they had mandated that PACs must be set up by the exchanges. So the exchanges, they had to set up PAC or Product Advisory Committee for each group or complex of commodities having common stakeholders on which derivatives are traded or are being proposed to be traded. So they are something like an independent body which will be helping those groups or complexes of commodities to be well managed, and those PACs, the performance review must be consulted with those, so that it can be independent and it can also help to get it done in a very transparent manner. And so that is all about the commodity derivatives review. Let's move to number 6. SEBI notifies common application form for FPI registration. So FPI, as we all know, foreign portfolio investors. With this form, government has done away with the dual application requirement. So earlier what used to happen, there was one application form which had to be submitted to SEBI, and another had to be submitted to the Central Board of Direct Taxes, CBDT, for a PAN application, a permanent account number. So earlier system used to take about 3 months, and the new changes, they are going to reduce the time needed significantly. So the time that is required for registration will be much reduced. So the form is now a 10-page long form, and it combines 3 forms: details required by the tax department, so that CBDT thing, whatever we used to have, it's gone there, and SEBI requirements, so SEBI's requirements, and also a third thing, which is the FATCA documents, Foreign Account Tax Compliance Act. Now remember, the FATCA Act is something, a US act, but we all need to follow it. Now I will not go much into detail. If you guys want a video on the FATCA, let me know, I'll be happy to make one. So the next thing is the form form, despite being shorter, is still longer than other jurisdictions. For example, Hong Kong has a 2-page FPI registration form. So Hong Kong's form is only 2 pages, but our form, it is 10 pages long. So we are not really making it so simple. But hey, Hong Kong doesn't have democracy, we do. So there's that. Okay, let's move ahead to the number 7 now. SEBI mandates benchmarking of alternative investment funds, AIFs. So AIFs, you know that they have a minimum threshold, investment threshold of 1 crore rupees. So they are high net worth individual investments. So only HNIs can go ahead and invest in AIFs. So now SEBI has mandated benchmarking of these AIFs. So all AIFs must report performance against appropriate benchmarks created by benchmarking agencies of industry associations with at least 51% of AIFs as its members. So whatever associations are consulted, they will have at least 51% of AIFs as its members, and this will actually increase the transparency in these investments, because they are for very high net worth individuals and usually they are not very transparent in their dealings. And it will be applying to all the benchmarks, including the VCFs. So the venture capital funds, VCF means venture capital funds. So these are the big funds which pour money into the startups, the organized venture capital funds. And angel funds are actually exempt. So angel funds, they are a little bit different from the VCs. So venture capital funds are the huge funds which pour in a lot more money, but angel funds are usually made up of individual HNI investors, and they go ahead and put some seed funding into the startups, and so they are exempt. And these benchmarks must be mentioned in all marketing material put out by the AIF where performance is mentioned. So anywhere where they mention their performance, they have to put out the benchmarks as well. And the deadline of this, it is 1st July 2020 for the first industry benchmark, and this first benchmark, it will be for the performance up to September 30, 2019. So that's all about the benchmarking of AIFs. Let's move to number 8 now. Rakesh Jhunjhunwala comes under SEBI radar over alleged insider trades at Aptech. So Aptech is actually an education and a training company. First, let's have a detailed look at what is insider trading. So insider trading, in a nutshell, you can think about any kind of information which is not available to the public at large. So for example, if I know that a listed company is going to be making a deal, a very significant deal, then tomorrow the market price will be increasing, right? So if I have information about this deal and I try to buy as many shares as possible, because tomorrow the market will rise and then I will be profiting. So this kind of a thing is called insider trading, and it is a highly illegal thing. So there are two kinds of things, insider trading and front running. So we'll talk about that later. So this is the practice of trading in shares of a company based on non-public information. SEBI norms stipulate that communication of unpublished price sensitive information is also a violation. So communication, if you just communicate the unpublished price sensitive information, that is also a violation. So you do not just have to directly trade. Even if you do not trade, even if you just communicate, then also it is insider trading. Now summons were done by SEBI under section 11C5 of the SEBI Act. So this is the section under which the summons were made to Rakesh Jhunjhunwala. Now Aptech is the only company in Jhunjhunwala's portfolio in which he has management control. The alleged illegal trades were done in 2016 in the training company. So just imagine, it is back in 2016. So SEBI can dig up the old information as well, and they can book you for that. Now remember the name Rakesh Jhunjhunwala. If you are not familiar with it, I think most of you will already be knowing and be familiar with this name. So he is a billionaire, and he is one of India's most prominent investors with a portfolio estimated at about 18,000 crore. So this is just for your information's sake. So even a big guy like that is being booked. Now number 9, SEBI is planning a difficult to recover tag for untraceable defaulters. So some defaulters which go ahead and become untraceable and do not pay back their dues. So SEBI will soon attach a difficult to recover tag for individual defaulters who are found to be untraceable, and also for cases facing parallel proceedings by other agencies, courts or tribunals. So if there are any parallel investigations, then also they will be using this tag. And difficult to recover tag, it is for cases where recovery of penalties or dues from defaulters is virtually impossible and amount involved is not worth an attempt beyond a point. So understand that SEBI, they have limited resources, they have limited manpower like any organization. So if you are always trying to recover the dues from companies which will not be able to pay, or their promoter has fled, then it will be holding back your resource utilization, right? You cannot utilize the resources correctly into the companies which can pay. So it is a very misutilization. To avoid those things, SEBI is trying to bring out these new tags. So the criteria of untraceable for individuals and parallel proceeding barring recovery will also be considered. So two more categories that can be considered. Now it will allow optimal utilization, as I told you, for resources for better chances of recovery. In some cases, like once in IBC, the Insolvency and Bankruptcy Code, SEBI has no scope of recovery as the Insolvency and Bankruptcy Code prevails over the SEBI Act. So since the IBC is prevailing over the SEBI Act, it does not make sense that SEBI goes ahead and pursues the recovery if it is already brought to the notice of IBC. So let's move to number 10. SEBI uses rare clause of SEBI Act to review penalties to rating agencies. Now this is a news item that I had discussed in my January 2020 SEBI Current Affairs video. So go check it out if you haven't already. And there I have mentioned that there was a fine of $35,000 and which is equal to 25 lakh rupees. Now because the CRAs, the credit rating agencies, they had some foul play with reference to the ILFS case, they had been penalized, but the market was expecting an even greater fine, and so this limited amount of fine, this was seen by many people as being very suspicious. So fresh notices were sent to the rating companies for failing to warn bond investors about the ILFS scam. So this is the SCARE, ICRA and India Ratings and Research Private Limited. This is another name. So two we have already discussed. This is the third name. Remember these three names very well. Now the agencies, they had assigned ILFS the highest rating of AAA before the default in September 2018, even though its unit had defaulted in June of that year. Now this is also something that we talked about. So in June they had actually defaulted, but still the credit rating agencies, they did not just change the rating. They put the AAA rating, and some cases AA plus rating were also put. And so after the default in September 2018, they just downgraded to D, and so it was something that was very suspicious. And the relatively low penalty, as I told you, of 25 lakh each on the three companies had raised eyebrows, given the seriousness of the lapses. So because it is a very serious lapse, but still they had been fined very less, so it was seen by the market as a very lesser amount of punishment. So the SEBI board, including Chairman Ajay Tyagi, felt the penalty was rather low. So SEBI used its extraordinary powers under rarely used section 15I of the SEBI Act to review the penalties imposed by its adjudicating officer. So the adjudicating officer is the person who is going to be giving out the fine. So SEBI board, they have overruled that officer's judgment, and they have again sent a notice to these companies. So maybe we will be expecting some greater fines to those companies. So let's move to number 11. SEBI shortlists IBM, Infosys and Wipro among others for data analytics project. SEBI, as we know, that they will be tracking the possible market manipulations such as insider trading and front running. So as I told you, there are two kinds of things. Insider trading is there, and there is front running as well. For front running, usually what happens is that the tips are coming from outside and some tips are coming in. So it is very similar to insider trading, but while insider trading is considered as illegal in all jurisdictions, front running in some jurisdictions is not considered as illegal. It is a gross violation, but not illegal per se. But SEBI considers both of these things to be quite illegal. So SEBI's data analytics project, it will be tracking the possible market manipulations of these two activities. So in November 2019, SEBI had announced plans to spend 500 crore on IT in the next 5 years, as well as have a data lake project. very important. Remember what is a data lake. So it is kind of similar to a data warehouse, but the data lake, it has much more unstructured and raw data. A lot amount of big data, it is put in this data lake. So a lot of data can be analyzed from the data lake, and SEBI has shortlisted 8 firms in total. Price Waterhouse is there, Capgemini, Decimal Point Analytics, Wipro, IBM India, NEC Technologies India, HP India, and Infosys for further process. So just make a note of these 8 names that have been shortlisted. Let's move to number 12. SEBI sends notice to NSE on CAMS stake sale and reappointment of key personnel. So what is CAMS? It is the Computer Age Management Services Limited, CAMS. So many of you might be using the MyCAMS app. So even I use it for my mutual fund investments, and you might be also using it for your mutual fund investments, or you might be using something like MFU utility, or you might be using Zerodha, whatever. This company is actually helping you to invest in the mutual funds. And so SEBI has alleged that NSE's acquisition of stake in CAMS was done without its approval and gave it effective control of CAMS. Now, without even taking an approval from SEBI, they have gone ahead and taken up a huge stake in CAMS. Now, SEBI has asked NSE to divest its entire 37% stake in Computer Age Management Services Limited, and also NSE has received a second show cause notice on the appointment of key managerial personnel, Anand Subramaniam. So his appointment had to be routed through SEBI's Nominations and Remuneration Committee, which was not done. Now, note that NSE being a stock exchange, now if they have control over CAAMS, which is actually selling these mutual funds, then it can be a very difficult situation. It can be a conflict of interest. So SEBI does not want this to happen. And also the second thing regarding the appointment, they have pointed out. So let's move to item number 13. SEBI has planned to prepare draft norms for social stock exchange. Now, social stock exchange, we have discussed all about what it is, who is heading the committee in the last video, so go check it out. Now, I'll just talk a little bit about the proposed things. These have not been put into law yet, but we are supposed to know the proposals. So the proposals envisage a platform along the lines of institutional trading platform with limited tradability to select investors. So ITP is a trading platform different from the main board, which allows listing and trading of specific securities for informed investors. As of now, it's used for listing of small and medium enterprises. This kind of a platform they are going to leverage, and they are going to have some norms for the social stock exchanges. So right now, what is the main difficulty? The difficulty is that valuation benchmarks are missing, which makes valuing the social organization tough. So there is a need of impact assessment. Now understand that when we have a social organization, it is very important to value it, because if you are not valuing it, then how can you list it at the social stock exchange, right? You have to have some valuation for that. So for the valuation, people are thinking about impact analysis. They are thinking about some other kinds of numbers, because traditional company numbers will not be applicable to all the social organizations. So it's very important that we have some valuation framework. And finally, tax breaks are given for donations at present to the social initiatives, but they are not transferable. So the tax breaks, when I donate to a social organization, I get a tax break, but this has to be transferable. Otherwise, how can you permit the trading in the social stock exchanges? So that is why the panel will look into its transferability to the investors investing in social enterprises. It's going to be a very interesting thing, because internationally also there are very few of these kinds of stock exchanges. So let's move to number 14. SEBI rolls out new system to detect misuse of client securities by stock brokers. Now this is a very interesting and a very important development. So an online register will record brokers' holdings of client securities. So the register will be holding the brokers' holdings, and the system will club all the information of client securities collected by exchanges, depositories, and clearing corporations during all types of trades. So two sources. One source is your the broker holdings, and the second source is from the trades which has been done. So you have to combine both of these things. So the securities holding balance computed is matched with the actual client securities holding in the demat account and submission made by the broker for the next day. So both of these two things are going to be matched. Any data mismatch is flagged and exchanges are alerted. So any kind of data mismatch, if they find out, then they are going to alert the stock exchanges, and we are going to know that there have been some misappropriation of funds. And so why has this been introduced? It's very important to know that this comes after the 2000 crore Carvey stockbroking limited fraud, where client money was used for unauthorized trades and raising money. So what they had done, they had pledged shares which they did not own, which was client shares, to raise money, and they had done some unauthorized trades. So what usually happens is that these stockbrokers, they get something like called a power of attorney, POA. So what happens in that POA, you or me, we can tell the stockbroker, okay, I am allowing you and you can go ahead and buy or sell on my behalf. So you might all have these phone calls that come up to you from your stockbrokers that, sir, can I buy this amount, can I sell this amount? That time you are giving the power of attorney to that person. And the Carvey stockbroking limited, they had actually misused this power, and this led to a fraud of about 2000 crore rupees. So in November 2019, SEBI barred Carvey from acquiring new clients or using the power of attorney. This is all done in the wake of the Carvey scam. So let's move ahead to item number 15. SEBI bans upfront distributor commissions in PMS, the portfolio management services that I talked about last video, and introduces direct plans. So SEBI has barred PMS providers from charging upfront fees to the customers directly or indirectly. Distributors will only get trail commissions and they will get no upfront commissions. So you know that trail commissions are over the lifetime of the investment, and the upfront commission, it is when you are starting the investment. So trail commissions are permitted and upfront commission have been debarred. And SEBI has also introduced a direct option for PMS investors who do not wish to invest through distributors, no distribution fees. So we were already talking about this in the last video. So the direct option, it has now been introduced. Now PMS providers, the exit load, remember this very well. So PMS providers can charge a maximum exit load of 3% on the first year of the investment, 2% in the second year, and 1% in the third year. Thereafter, PMS providers cannot charge any exit load. So after the third year, they cannot charge any kind of exit load. So exit load, you all know, exit load is when you are redeeming your mutual funds or you are redeeming your PMS investments. When you are redeeming those, then there is a load or there is a fee that you have to pay to the company that had invested it. So that fee is no longer needed to be paid after the third year is done. So let's move ahead into item number 16 now. SEBI plans to implement governance structure to ensure ongoing compliance. This is actually something that SEBI will be doing for itself. So it will be custom made to suit the needs of business and advising staff of the obligations to ensure ongoing compliance. So SEBI will prepare policy documents, standard operating procedures, and other IT documents through consultations to safeguard information systems, IT assets, as well as IT investments. So SEBI has invited expressions of interest, EOI, from agencies for consultation for IT policy preparation, risk assessment, and SOP documentation. So for that, expressions of interest have been sought. So the agency which is going to accept it, which is going to be selected, they will need to conduct risk assessment of IT infrastructure deployed at SEBI annually, calculate risk score, review controls and its impact on policies and SOPs, and changes required in the reviewed policies and the SOPs. So it will ensure the ongoing compliance and all the governance structures will be followed by all the employees. So that's all about this. Let's move to number 17. SEBI tightens norms for investment advisors to prevent mis-selling. So SEBI has barred investment advisors from simultaneously selling financial products and advisory services and proposed a fee cap of 2.25% of assets under management or a maximum amount of 75,000 rupees per annum. So this is something that has been done to prevent mis-selling. In the last video also we talked a little bit about this. So SEBI has barred the use of the description independent financial advisor, IFA, or wealth advisor or any other such names by distributors of securities unless they are registered as investment advisors with SEBI under the Investment Advisors Regulations 2013. So this is a very important change. Now people will not be able to dupe you by saying that they are investment advisors or wealth advisors. They have to take the corresponding license, they have to take that corresponding registration, and only then they can go ahead and offer that. So it will actually help the customers quite a lot. Let's move to item number 18. SEBI reviews margin framework for cash and derivatives segments. What is margin now? So margin, it actually allows somebody to invest more than the money that they have. So you borrow some amount from your stockbroker, you can say, and you can go ahead and do some trade. So that's margin trading. So it's not very important to get into right now. So margin, it is the minimum fund of security an investor must pay to the stockbroker before executing trade. It's collected upfront by the bourses before giving exposure for trading in equity and commodity derivatives. Now SEBI has reviewed the margin framework. So for cash markets, SEBI divided the VAR margin rates in 3 categories based on liquidity. Now what is VAR? It is the value at risk. So it is the maximum risk, you can say, that you can suffer. So it's a mathematical formula that you can go ahead and read. I think you will be actually needing to study this for your exams. And for derivatives, SEBI reviewed its guidelines on volatility calculation, scan range on price, as well as volatility, calendar spread charge on various products, minimum charges on short option, extreme loss margin, and margin on consolidated crystallized obligation. So this is a little bit complicated. Everything you do not need to remember. Just remember that for cash and derivative segments, it has been a little changed. And remember this, that additional margin of maximum 1 day volatility for highly volatile stocks which change greater than 10% in underlying market for 3 days or more in 1 month. So there will be additional margin for the highly volatile stocks. So which are the highly volatile stocks? They are the stocks which are actually fluctuating more than 10% in the underlying market for 3 days or more in a month. So the maximum volatility, the maximum change that has happened, that will be the additional margin. So additional margin will be added based on that. And SEBI has said that risk management is primarily a responsibility of clearing corporations. This is very, very important, that the clearing corporations, they are the ones who are going to be managing the risk. Risk management is on them, and the framework prescribed by the regulator is a minimum framework. So the clearing corporations can go ahead and do some extra work if they want. They can have some extra requirements. So let's move to number 19 now. Tata Mutual Fund offers commodities arbitrage in new multi-asset mutual funds. So back in 2019, SEBI had allowed mutual funds to invest in exchange traded commodity derivatives. So you must have read about this news, and finally Tata Mutual Fund has come out with an offering regarding this. SEBI has said that it can be done up to 30% of the scheme's assets with no individual commodity exceeding 10% of the scheme's assets. So gold funds are not subject to these caps for gold. So very, very important. Just understand that how the exchange traded commodity derivatives are going to be acting and what are the caps for the percentages. And Tata Multi-Asset Opportunities Fund will invest 10 to 25% of its assets in commodities and seek returns from arbitrage trade in commodities. So it's very important that Tata Mutual Fund has come out with this, and remember these norms that SEBI had actually placed, because this is something that is quite new. And so let's move to number 20 now. Carvey plans stake sale to honor client payouts after 2000 crore fraud. So we talked about the Carvey fraud a little bit ago, and on 22nd November 2019, SEBI had barred Carvey from acquiring new clients and using power of attorney, thereby preventing the company from trading on behalf of clients. So I already talked to you about all of these things. This is just the same repeating thing. The broking firm is facing a shortfall of 678 crores, very important, in dues to banks and investors. So this is the amount of shortfall that Carvey has to make up for, and Carvey has informed the NSE that it will sell a stake in one of its firms. So the broking firm will use these funds to clear the investor dues. So they are trying to clear the investor dues so that they do not face any further action from SEBI. And SEBI chairman Tyagi has said that he is looking into all of these aspects. So let's move to number 21 now. SEBI clarifies that Mauritius funds will continue to get registration. Now, why did SEBI have to mention this explicitly? This is because the FATF, the Financial Action Task Force, has put countries including Mauritius, Pakistan and Cayman Islands on its grey list, which indicates that the jurisdictions have weak rules to prevent money laundering and terror financing. So FATF, it is a body that is headquartered in Paris, France, and they are the body which is actually considering all of these AML MCL and the CFT rules, and they always put countries on lists if they are not following the correct rules to combat financial terrorism and the money laundering things. And so the terror financing activities are also controlled, and FATF had actually put these countries on their grey list. Now Mauritius along with USA is a large source for FPI flow into India, and so SEBI has clarified it. So SEBI said that we are going to get the registrations from the Mauritius funds. However, they said that they will subject these funds to stricter KYC norms. So SEBI is going to look into these funds so that any kind of money laundering or any kind of terror financing activity does not happen. So that's all about this news. Let's move to number 22. SEBI investigation reveals Indigo flouted rules in some related party deals. So Interglobe Aviation Limited, this is the parent body of Indigo, they have violated some governance and listing guidelines in some of its related party transactions. So what have they done? Some of the RPTs which were considered not material by the company exceeded 1% of the company turnover, the threshold for materiality, and thus needed shareholder nod. So materiality threshold we have already discussed in the last video. So of course the shareholder nod was not taken. That is why they are facing this action. So SEBI investigation also found out that only some of the transactions were approved by its audit committee after the transactions had occurred. So there were multiple violations going on, and SEBI has gone ahead and just sent some letters to Indigo regarding this. And right now the recent news is that Indigo has responded back and the consultation is going on. So let's move to number 23 now. SEBI allows mutual fund purchase directly from exchanges, bypassing brokers or distributors. So this is a very good news for you and me, because investors can now directly access the infrastructure of stock exchanges for purchasing and redeeming mutual fund units directly from mutual fund and asset management companies. So through the exchange we can buy these units, and no need to go through stock brokers or mutual fund distributors. So there is no more need to go through these intermediaries. If we want, we can directly buy. And so exchanges will have to bear some costs for the KYC, back office, customer care, but the mutual funds will get a boost. So direct mutual funds, they do not have any commissions involved with the distributors, and they will be getting a lot of boost. So this will also boost the ease of doing business. So this is something that will actually help us have the ease of doing business in these things as well. So let's move to number 24. SEBI brings strict regulatory framework for corporate bonds debenture trustees. So who are the debenture trustees? Remember that there is a debenture trust deed, DTD, that is signed. So debenture trustees, their responsibility is to actually help the debenture holders. So they will look into the interests of the debenture holders. So they are very, very important, and SEBI mandates these. So among other measures, SEBI suggested that NBFCs must create charge on the identified assets for every bond issue. The NBFCs must be creating charge, and increased, this is actually what they said. So increased events of default by a few financial institutions and the lapses or complications on the part of debenture trustees in the expeditious enforcement of the security has brought to the fore the need for a review of the present regulatory framework for debenture trustees. So what have they done? For standardization of debenture trust deed, DTD, SEBI divided it into two parts. One part will have standard clauses common to all DTDs, so everything will be common, and the second part, it will contain specific and customized clauses and covenants relevant to the particular issue for which the DTD is executed. An SOP, standard operating procedure, will list out the penalties for specific violations by the issuer company for the listed debt. So this is the strict framework for the debenture trustees that they have started right now. So let's move to number 25. SEBI slaps penalty of 5 crore rupees on Mayhew Oxy and others in PNB fraud case. So SEBI has slapped a penalty of 5 crore on the Gitanjali Gems Limited and its promoter Mayhew Oxy for failing to make various requisite disclosures. So the non-disclosures were all related to the PNB fraud, and it is important, the highest ever penalty imposed on a company for disclosure violations. So it's a very important thing. Now PNB was defrauded to the tune of 14,356 crore. We already know this, by Nirav Modi and Mayhew Oxy through his companies including Gitanjali by issuance of fake letter of undertaking. So we already know about the scams that had happened. So if you want me to make some videos regarding this financial scams, let me know. I'll help you out. So let's move to the final item for today. So it is SEBI Chief Ajay Tyagi gets 6-month extension. So the last date for Ajay Tyagi was March 31st, 2020. Finance Ministry has extended his tenure, and they said that for a period of 6 months beyond 29 February 2020 or until further orders, whichever is earlier. So right now, with the coronavirus going on and so much market instability, the government thought that it was better that Ajay Tyagi should be at the helm, and so he will be able to continue with his developmental agenda as well as his mission to go after market manipulators. So under him, SEBI has had a consultative procedure. So this is very important. Why did I put this? Because you need to understand how the SEBI is operating under this person. So this is the chief of SEBI, right? And how has the SEBI just modified its operations because of Ajay Tyagi? So because of him, they have a consultative procedure for drafting regulations while emphasizing the need for it to be free from regulatory capture. So very important, regulatory capture is when private entities, they enforce certain things and the regulator has to just listen to those things. So that has to be prevented by the SEBI, and Ajay Tyagi has done a fine job by all accounts. So in the last 3 years, SEBI wrapped up long pending high profile cases such as a fraud case by Reliance Industries Limited banning Price Waterhouse for its role in the Satyam computer scam, and NSE's unfair access case. And there were many other scams that we also discussed about. So Ajay Tyagi will be staying on for 6 more months and he will be looking into all of these things. So I hope that I was able to explain all of these things to you and that you enjoyed this session and it was quite informative for you. If you want to see more of these sessions, please subscribe to my channel, and if you like this video, please leave a like and let me know if I can improve it further. I hope that you learned something from this session and that it was beneficial to you. I'll see you in the next one. Bye bye.